was real and this is a turn?
Nope.
Okay. That's it. Yeah, it's fine. Kman, what do you think? So you're looking
Good
to
morning.
fade the, good morning. Good morning, buddy.
I think we're still living day to day. And yeah, as Ryan already said, bit of optimism. Can see that in the yen crosses. Bit of investment money apparently in there as well.
Yeah.
Taking it through the what was it, 135.85, and then it's still looking a little bit, but there's quite a bit will depend on what's happening tomorrow on those Biden and whoever else meetings. But there was already a bit of rumors out end of last week saying that they may be working on some kind of program or deal, or you name it as you wish, to meet some of the requirements of the Republicans. So they may be, and the market just likes it. But we find it back. I mean, the U.S. yields are a bit better paid, and then the equity market is stable. And yeah, we hopeful Monday we starting. And it's not the first Monday we see this for then completely to be reversed the rest of the week. But yeah, we are living hopeful Monday again.
Okay, well, the hope for a lot of S&P bulls are that, you know, this finally happens. You know, this 4,200 breakout area right here. So
patience.
That's going to be declared a breakout.
Yeah.
Over 4,200. I know a lot of bears are waiting for 43 to sell. I think it's 61.8 back. It's starting to look more likely like they'll get it. So your demarcation lines, the only other you know, negative I guess you have to follow is you know, this support area that we held twice.
Yeah, 40.5, 43/4. That's where it plays ball or not, right?
Yeah. So there's our bracket.
Yeah.
You know, and I guess you just flip a coin. I think that
while waiting for it to happen.
Yeah, and you know, not much of a recovery in gold. I still see it like sitting on a shelf, like Wile E. Coyote.
Yeah.
Right here at 2000. Huh?
Short term 1990 to 2K. That's it's actually pretty okay for those who trade pure text, that to have had this double bottom at 2000 in the really short term, and you have your 4-hour line there as well. That's a nice little level for the real short term players to keep an eye on if they are getting a bit of FOMO or really want to put a trade on ahead of any decision made, or ahead. It's still going to be a pretty busy data week as well this week. So I think on the Mondays, wait for what is to happen time.
Yeah. You know, to me, you know, this kind of bearish formation. You know, flat bottom. It would have been more bullish to me, okay, if it had taken out this low by a little bit and then turned up. You know, I would say that this gives people the hope that bought it here that it was going to hold again. And we'll see. The rally off at this level last time was pretty good. I suspect that we won't do much better than 2025. But, and I do think we'll take out 2000, which measures 1940, which is then approaching the major breakout line at 1920. There's the line for the breakout down here. So I think that's a magnet.
It could become one if you start to break a sub 1990. I in really short term, I have a little level around 1990 as well. If it starts to break down there, then it might accelerate.
Yeah, and this was you know, kind of a negative week in gold, but it doesn't even compare to how ugly the candle was in silver. I mean, silver really gave up the ghost last week. So silver's leading it. leading this correction. We'll see. I think that's a high, that this high is going to hold for a while. You know, I don't think that last week, Friday's low is going to be the low. I don't see a lot of major bottoms happen after a big red candle off a pretty bullish market with a lot of longs. Talking silver squeeze and everything else. So that's just my view.
I just shyly started to reload when I sold up closer to 26, and want to leave it a lot of room to add. I do think that if ever we see a major move down, it may be time to start to load them up again. But it's really, I'm very patient, and really it's all small add-ons, and see what happens. But we have to respect those stops that we've put in place. I'm going to handle it quite dynamically if it goes back up there as well.
Okay. All right. And Ron, you have any other impressions you want to share? I know you were like into one-word answers today. Anything else? You know, you got to fill up more airtime than that, buddy. Make my job tougher, huh?
Yeah, well, as Kay said, I don't think that the dollar's flying. I don't think it's done. We're just walking the ranges. We've got some decent data this week. It's the start of the manufacturing week in the US. Empire today, which has been a bit flip-floppy of late, but it kicks off the manufacturing week. We'll see if we got that further divergence between manufacturing and services. Obviously, that's one to look at for oil. If you know, manufacturing is looking soggy again in the US, could see oil dipping further lows. And probably the two highlights: retail sales and the Japan CPI on Friday, among others.
Okay.
And power speaking. Yeah, so there's lots to get our teeth stuck into, but nothing I see driving us to new trends or ranges for now.
Yeah. So we're already entering summer doldrums.
I think we were there beginning of end of spring, beginning of spring. Yeah. Just this range. We're moving from, you know, we were playing the hike hold game coming into this year, and now we're playing the hold cut game. So that's what the market's going to be leaning with. You know, we've had three central banks, big central banks, and the currencies have been sold off pretty much straight after. That gives you all the clue you need, really.
Okay. Well, I've heard, as far as the dollar is concerned, that we need closes over 103.50 to confirm that was it, and we're embarking on something. I don't know. I look at huh?
You finally got your 102 break, and now it needs to hold it, doesn't it?
Yeah. I think it could get at least up to 3.5, but I was looking at this maybe for tomorrow, instead of making too big of a deal. Although it is holding it, that if we did have another up day in cable and euro, I think euro has to get back over 940. EG is still soft, right? It still doesn't look great. So euro's your preferred short. I think euro has to get back over 109.40 to, negate what happened last week.
Right 109
now
first.
Yeah. So I would sell. I'd take a shot at euro up here. We got up here, but let's see what Stel has to say about metals. You want to talk about metals, Stel?
Hey, hello everybody.
Good morning, buddy.
Yeah.
I mean afternoon.
Yeah, you are right. The silver candle was very, very bearish. What I always do is I try to understand what's driving moves when they happen like that. So the dollar rallied 0.5%, and silver decides to drop 5%. I mean, it doesn't make a lot of sense. I think there was a lot of some profit taking, maybe also a lot of stop. It was a stop hunt, I think. We got very, very large amounts of people very, very bullish when we were heading above, towards 26 and above. And we were talking that this was an important resistance level. and not to be chasing it. And if anything, you know, myself and Kay, we unloaded some of our longs, and but it felt like every, you know, you will have seen it, every other post you see on Twitter or anywhere, they're talking about how metals are going to go to the moon. Well, I think they're going to do well, but first they have to correct. And this weekly candle was very weak for silver. Do we have more downside? Maybe, but it's obviously going to depend on the debt ceiling and all the other stuff. It was driven, it started with $1, but, you know, as I said before, 0.5% move in the dollar doesn't really justify a 5% move in silver. So it was a trigger for stops and for other positioning, let's say reshuffling. So do I think there's more downside? Of course there could be, but I think we're going to get to a level again where it's going to be excellent kind of medium-term buying levels.
If we do continue to correct to the downside, you had a 2380. What's your next support level?
Yes, so you guys know I got in at 2390, and I think Kay got his third or quarter position, whatever it was, roughly around there. I mean, if we break below that, realistically, I think we're going probably to the low 22s.
Okay.
So that's it's a fib. It's also the 200 DMA is converging towards there. So, or it's going to be converging towards there. It's also that 21.8 to 22.5 roughly area is an area of importance. So I think to low 22s is not unreasonable.
Well, this double top measured approximately 23.
Okay.
It was, you know, $1.50.
Yeah.
And, you know, the fact, I don't think it's a stop hunt because it didn't just take it out and turn. So now it has to prove itself. So, you know, maybe there's still some, right?
Yeah, but stop hunts can often take days to complete. You know, it's not just one day because it's a kind of a waterfall effect. But let's see what happens. Yeah. I'm still, you know, very, very positive on metals, especially silver has a lot of catching up to do. Gold is near all-time highs still. But, you know, you have to take your time. You have to be patient. You have to wait for the levels to come to you. And of course, you can never be, you know, always right. You know, you can accept that you're going to be wrong sometimes. Anyway,
yes. So
I think
there's GDX double top.
Yep.
Silvers look a lot weaker, the silver miners. See the difference between the gold miners and, you know, silver miners?
Well, they are affected by the underlying price, right? And silver underperformed. So
it got caught up with copper, I think. So, you know, I think it's a possibility. There are a lot of copper bulls. In fact, I'm going to have Adam Button here Wednesday, and Adam's a big copper bull. I know we're bouncing, but it's pretty big decline. So
yeah, copper more than silver, but it's you know, both are tied to the economy, right? I mean, it's especially copper is the biggest indicator, I think. So we have to be aware of
generator.
That. Exactly, we have to be aware of that, and it's one of the factors moving the price. Gold doesn't have that. I mean, gold is what, jewelry and some industrial application, but nothing, nowhere near the others. So we have to be aware of that.
Let's see, Grega's with us today.
The wizard.
Grega.
Hey, I'm here.
Hello,
hey,
handsome.
Hey,
so I know when I know what, yeah. See, everyone wants to be as handsome as Grega. I would just like to be able to trade as well, because I'm already handsome. anyway, so Grega, so when I see your name in here with the rest of the panel, I know you have some things you want to share and talk about, so I'll give up the screen for you.
Yeah.
I'll do that.
Okay.
There it is, and I'm glad to do it.
So, well, we have seen a pretty aggressive dollar buying last week, and I just think that based on how we close on Friday, that there can be room for some more dollar strength. Now, that's obviously from a poor technical perspective. And if you look here on this overlay chart, you can clearly see that this recent weakness on those majors has been driven by lower US notes, while the US yields has seen a move to the upside, while stocks are still sideways. So I think that stocks are a little bit tricky till we get more idea what Fed is planning to do. So in my opinion, we just have to focus more on the US notes versus majors. And if we consider that we have a pretty aggressive sell-off on, I mean, especially on commodity currencies, then I also think that euro and pound will also remain under pressure, especially after, despite this hawkish Bank of England last week, we have seen a pretty aggressive reversal lower. So if we look at the cable here, notice that there was a very nice move out of this wedge after these 5 waves up. So I think that even if that's just temporary weakness and we will not go anywhere far, I still think that there is room for another maybe a 200, 300 pip drop after the current rally. So looking also at Kiwi here, I mean, I really like how the price action itself unfolded last week. We have seen in the middle of the week, we have seen a break to a new high here, cleared a lot of stops, and then a massive reversal. And this was also the case on Aussie as well. But I believe we have meeting minutes this week, and RBI is a little bit more hawkish, maybe expectations. So if you're looking for trade, maybe that's Kiwi on the short side could be a better play than Aussie. Also, it's much more extended from the recent highs than Aussie. So I think that from an Elliott wave perspective, that this was a corrective rise and that we have room for even 60 to retest before market finally turns higher. I am, however, bullish longer term, but I just think that these much lower better levels could be retested before we finally take over the bullish side. Also, if we look at the euro, maybe euro dollar itself is not really that clear, but that's why I have here the euro index, which is more equal weighted. And you can clearly see a very nice bullish impulse here with a very sharp reversal over the last 2 weeks or so. And it looks like that this could be end of a fifth wave. And again, we are in a corrective phase. So in my opinion, there can be a little bit more weakness coming. Also looking at the euro versus US dollar, we broke this channel support here a few weeks back, and now we are trying to accelerate lower. So if dollar will maybe stay strong through this week, then in my opinion, this consolidation will continue, even potentially even to retest these lows from earlier this year. But generally speaking, I think that euro has reached a multi-year bottom here, but this correction, some choppiness should show up before we may finally see a move to the upside.
You have a 2 all the way down at 102. That is viable?
105 is first, 102 would be a little bit more extended target. But yes, that's where you have this 61.8%. So you know when the higher degree corrections are in play, this FIPS is everyone watching actually. Also, since you mentioned metals, maybe it's worth to keep an eye on gold, obviously, especially if you're more you like bullish side more than bearish one, then because of silver, obviously, who dropped quite a lot. But notice that gold didn't actually go far here. We are just consolidating. So I think that gold still has a potential building triangle pattern here in a wave 4, but we should stay above 1960, 1958 here. We should hold this level. It's a critical level for bulls. Also, since I mentioned silver, not sure if you checked this, showed this earlier, but we are now currently coming into this trend line here that was broken back in at the start of April. So if this trend line can provide some support here, then and we rally, then I think that gold will also do well on the upside from that current consolidation.
Okay. Underneath, what would you, if it negates a breakout?
Well, if
would that kind of look like an ABC, the whole thing?
Yeah, I mean, but keep in mind that the whole movement from
but it broke the uptrend, downtrend.
Yeah, from 2021 highs will just become even more complex. But I really don't believe that we will reach these levels anytime soon. So longer term is still very bullish, yes. And 20.
Okay, so I know you say S&Ps are tricky. What's your gut tell you on, everyone's waiting for 4,200 breakout?
Yes, I mean, as long as we are holding that level, big ranges will stay in play. Notice where is VIX here at the lower side of the range. So I'm still wondering if maybe we can get this wave E. I'm pretty sure that if we will spike here above 4,200, then I think that this move could be a little bit overcrowded later. And maybe we will not see just straight move to the upside like everyone expect. So I still assume that we could see a little bit lower prices here for this pullback into the wave E before we finally take the bullish side out. So for now, we are still trapped in the range, but big level, in my opinion, should be around 4,070. It was a few times very nice, very important level here when you look back over the last 2 months or so.
Yeah. Okay.
But sooner or later, I think that we will see a break higher. I'm just not really sure if we are there yet.
Okay. Anything on Bitcoin?
I have Ethereum here.
Okay. You did a piece on Ethereum, didn't you?
Yeah, I did, because I mean, cryptos has seen a pretty nice recovery from start of the year. So always when we are in that kind of an uptrend, I will try to look at each pullback as a potential correction, especially when you have a pullback in 3 waves. So for now, as long as we are holding this 1700, which could be a key support for this week, there's still a chance for this bull run to resume. But obviously, if we suddenly, let's say, break below 1600, then in my opinion, we are headed much lower. So it will be very critical time in the next few days, in my opinion, for the Ethereum and Bitcoin in general, of course, all cryptos.
Okay. Have you said said your say? Or you have anything else you want to share? Really nice looks, Grega.
Actually, maybe just a quick look here on the 10-year US notes.
Okay.
I think that we are here, we'll see more upside away from 2022 lows, but looks like that this wave 2, sub-wave 2, that is part of a higher degree recovery, could still have some work to do. Maybe supports could be retested here back from April swings. So So maybe in the short term, this equals to some dollar strength that could resume from last week.
Yeah. Do you think that this move, and TLT has a kind of an ascending triangle with a flat top at 109? I've been watching this formation for a long time. Do you think that the move up in price, not yields, in notes and bonds, there you go,
I mean,
is going to be driven by risk off, or that's going to be the bullish catalyst for the market?
I think that stocks could be more stay sideways, and that this could be more moved by the US dollar.
Okay. All right.
Yeah.
So normally we would think, and what's really behind the move in the US dollar? Is it risk off or just?
Yeah, of course.
Okay, risk off. So risk off meaning a dollar rally continues a bit. Notes are good, and there's some fear in the market, so maybe we get that pullback like you're looking for in S&Ps. That's my takeaway.
Yeah, exactly.
Okay, and there's
going to be, as you mentioned, TLT, here we have a very constructive range, in my opinion.
Yeah.
I mean, it looks like a bottom formation, at least temporary.
Yeah, and but people are going to label this, even if we get a breakout, Greg, I think they're going to label this as still a 4.
Yeah,
a big 4. And
yes, but there's still room for, August 2022 levels to be retested.
120. Yeah.
So pretty nice upside potential still.
Yeah. All right. Great look. Grega has offered to anyone who wants it that signs up today an autographed 8x10 glossy of himself sitting at his in his office, scalping and doing his waves. So if you join today, let us know. We'll get that out to you. Thanks a lot for offering that. I think some girls might take up that offer. We'll do anything, Grega. Will you sell your image?
If you don't sign up, you get an 8x10 of Steve.
Oh my God.
Hey, Steve.
Oh God, better bring Blake in. Blake,
yeah, before the
Blake,
conversation gets even weirder.
Yeah.
Blake, you better crack the whip here, buddy.
Hey, good morning,
morning.
everybody. Look, we are actually just less than 5 minutes away from some data.
Oh my God.
And time has gone really quick today. We got yeah, a little bit less than just about 3 minutes. So let's go into the data. Hope everybody had a great weekend. And I don't
hope you liked F.A.C.E today, Blake.
What's that?
I hope you enjoyed F.A.C.E today.
I did. I got to see Grega's charts. It was great. Got to hear from the entire team. Very good stuff. I was just taking a look at the dollar. We have just a little bit of a pullback here into the breakout point. So remember, we're trapped right here between the let's take this high right there, this previous high, and then 38% retracement, which we're rejecting thus far. You know, break above that high would be pretty bullish. But we've got data coming out, so let's get to it. I'm going to pull up the data flash and then get our charts here. Let's see, we got the dollar, S&P, there's the dollar right there, S&P, there's yields. Yields have had a nice bounce, and you know, one of the reasons why I think the stock market is, you know, kind of done pretty well is because we're getting close to the you know, debt ceiling. Right now, the debt ceiling X date, and it seems like, you know, you're going to have Biden and McCarthy meeting tomorrow, but you know, some of the aides have provided some context that they're getting close, and you know, they all understand the importance of finding a deal and how it could really hurt the economy. So I think people take that as a positive right at this moment. But
I wouldn't.
You know, we'll see. What's that?
I wouldn't. I think Biden needs cover. You know, the economy is going to be lousy going into 2024 from what the Fed has already done, and he'll get the blame for it. And he could use a scapegoat, like a technical default, to have cover and say it was the Republicans' fault. So that's my view.
Yeah, although assuming that they're really convinced that something like that is happening, because if you've noticed, usually the politicians are not the best in forecasting the future path.
Well, you don't have to be with what the Fed did. I mean, it hasn't even really, you know, we do have a financial crisis.
That's one point. On the other hand, I would agree with you, Dale, on which part. I think that agreeing to talk is something that would be unavoidable, because nobody wants to show that they're not willing to talk, right? Because if you're not willing to talk, then you're going to be blamed immediately for any fallout.
All right. Well, I think he wants that he'd be willing to let it happen so he could blame the Republicans for what was going to happen to the economy. And
yeah, I'm not saying that.
All right, guys. Hey, we got less than 10 seconds, guys,
all
for
right,
the data. All right, Empire State Manufacturing about ready to come out. So heads up.
Minus 31. Jesus.
Yeah, that's a big big
See
move.
what I mean? He needs cover.
Moly.
He needs cover, man.
Yeah.
The euro
listen
popped.
Listen to the old man.
Look at the dollar index has just moved lower. You have the dollar yen that's breaking down.
Wow.
Euro
definitely
that's
a very bad number.
That's an outsized number there.
So now, Steve, do you think President Biden needs cover going into 2024?
No. I didn't disagree with what you said, that the economy is probably going to be going bad. I mean, in my opinion, there is no question about that. It's a matter of which month or whatever. But that's not necessarily how things are going to work out. I mean, because on the other hand, you know, going in a technical default can have, you know, very, very big side effects that are, you know, at the end of the day, he's going to be the president, right?
Yeah, you don't want to go there. You really don't.
You don't want to go there, because at the end of the day, everybody will be, during his presidency, X and Y happens.
Yeah. Anyway, that's my opinion. You know, we'll see what happens. Looks like the Dixie is right at.
Yeah, it's right at the
right there, man.
Yeah, it's but you know, this is a pretty bad piece of data. Let's see if the dollar firms up on some like risk aversion, because what you're seeing is the dollar actually, you know, stay relatively bid against the Canadian, which and I have to go into more intraday charts here, because this is a tell, and you can see with the Aussie and the Kiwi, there's a tell that you're not seeing the dollar really weaken against those, that this is more of a risk off type of move. You're seeing like some of the yen pairs, like the Aussie yen, just give up some gains. New Zealand yen, Canadian yen, those are all moving as a result of some risk aversion. So, all right, guys. Well,
Rohit is not here. Do they have different time changes there or something? We confirmed this. Well, he saw that Kathy was going to be here.
What's that?
We tweeted that Kathy was going to be here. Maybe.
No, I think we tweeted that Rohit's going to be here.
Oh yeah, but that was the weekly guest. So I don't know.
No, Rohit about 40 minutes ago that he was supposed to be here.
Yeah.
Anyway. That went out today. So okay. Well, since he's not here, let's spend a little bit of time talking about who from the team is still here.
I am.
Ryan.
I think we're all here.
Grega's here, Stelios left, Steve's here, and Dale. Okay. Hey, all right, let's do this. Ryan, you were on the Flow Show today. What was the big topic of conversation, obviously, for the Flow Show this morning? What did us as North American traders, what did we miss that you guys talked about during the Flow Show?
Not much really. It's an early start to the week, so we like to get set up, look at what data's coming, that sort of thing. You guys are talking about it's risk off from what? I want to know. That's my question for you guys. Dollars higher on risk off of what?
Oh no, the dollar's not higher. The dollar. No, what I was saying is since the data was poor, right? You had this. The Empire State Manufacturing data was really weak. The dollar weakened initially. Like you can see how the dollar, like initially, the euro spiked up, but notice how it's come right back down. If the market starts to cue in that this is pretty weak data, and like the economy is slowing much quicker than it once, can the dollar firm up on risk aversion flows? That was my point, and I think it is. I mean, look at the dollar Canadian; it's actually at the highest levels. Even following the data, we're at the highest levels that we've seen in an hour. So you're starting to see the dollar kind of firm up on this as the markets are rolling over a little bit. If you look at the S&P rolling over, that's what I meant.
Oh, right. No, just because before the date, everyone was talking about risk, everything's being risk off. I just want to know what.
Oh, yeah, I don't understand that either. I don't think the market is risk off at all at this point. Yeah. But following the data, we are starting to see it now. One of the things I wanted to point out with the S&P, and I posted this in the S&P or the indices room, we're up against like some nice resistance here. So if you're long, the S&P is just look at the intraday price action, over the last couple of days. You knock your head up against this resistance, you roll back over. This has been literally all of last week. So, we're just, back to the scene of the crimes, if you will. So anyway, so what do you, okay, Ryan, I'll shift from you here in just a second, but I want to ask while Dale's looking around for Rohit, what's going to be on your radar for the week? What's the big deal that you're looking at this week? Like on the week ahead video, I really talked about more of the retail sales data that we have coming up in the US, seeing how the consumer has really fared. But what are your thoughts?
Japanese CPI is the one for me on Friday.
Okay, on Friday, which will be Thursday late night here for us in the US, and it'll be obviously really early in the morning for you.
And we've got out speaking
on
late
Friday.
in the day on that Friday. Yeah.
Yeah. And by the way, if you guys haven't seen this, the dollar yen, this morning we were rejecting the 618 retracement, and the update from this morning on ForexAnalytix was that we're at the 618 retracement, should offer strong resistance in the North American trade. And we've come off about 40 or 50 pips from these highs. So what do you make of the inflation data that's coming out on Thursday night, Friday morning?
Well, it's set to go high, and it's going to be a big test for the bank because overnight or over the weekend or this morning, sorry, they had a cabinet committee type meeting where they want to make sure basically that they don't return to deflationary pressures. And if we get another hot reading of CPI, they're going to have to look the other way and maybe acknowledge finally that inflation is more persistent than they think, though they still expect it to tip later in the year.
Yeah. Do you think Ueda is going to actually start to change his tone a little bit, because we haven't really seen that as of yet?
No, he already is. Most of the comments now are pointing towards what they may do on an exit, rather than we need to go reinforce the message that we're going hammer and tong. He still drops that in that they're going to continue easing, but everything else is about potentially coming out, and that's the shift. All
right. Well, thanks for that heads up, Steve. I know over the weekend you might have been reading some articles or doing a little bit of research. What are your thoughts going into this week that people should be focused on?
I think that despite the price action we saw at the end of last week, right, and we did have some strong moves during the past couple of days, right, especially with metals and some dollar pairs, commodity currencies, the USD yen, so on and so forth. I think that we still haven't conclusively changed dramatically anything that we've seen lately. And I think we still, until proven otherwise, remain in a rather choppy environment, the result of a lot of indecision and insecurity having to do with the markets about how we move forward in the months ahead, having to do with monetary policy, plus some questions on the fiscal side. A good example is the US situation having to do with the debt ceiling, right? So I think it's a little bit dangerous trying to assume that new trends are in place. I do think that this move lower, especially in metals, is a buying opportunity. And although I do believe there is a possibility for a little bit further of a dollar rebound in the days ahead, that is also going to be a selling opportunity. So I think any relief rally in the dollar is going to be rather short-lived.
Okay. Well, since this is the 38% retracement in the dollar index, that's kind of where we topped out last week. We'll see if that can contain us, and if we get above that, it might allow us a little bit further gain. So good heads up. Thank you very much, Steve. Dale, it looks like, well, first of all, actually, before I go to you, Dale, it looks like Grega's still here. Grega, you still mic'd up?
Yes.
Hey, I know you probably already said a lot of this, but what's going to be like your key trade going into this week? What's the number one asset that you're looking at going into this week?
Cable at 2530 to 2570.
Okay, cable at 2530 to 2570. So you're going to be looking to sell it up there?
Yeah.
All right. So you can, this is right off of ForexAnalytix. So this is what
so Grega, really you also think the dollar rebound is probably short-lived, right?
Well, it can be short-lived, yes, but at least here, as I said earlier to Dale, I mean, after this very aggressive closes last week, I just think that, or at least at the first half of the week, we have some dollar strength left.
And
Yeah, I think so as
Cable
well.
Grega has the chance of having completed its whole move, right? Whereas the euro may not have, because you're saying it might have been an ending diagonal.
Yeah, I mean, I'm looking this just from a poor technical perspective regarding the wedge, and we know that when wedge is finished, we could retrace all the way to the starting point, and the starting point of the wedge was around 12350. There was wave 4, wave E. Yeah, so I think that we have some room for more weakness here. And we have a pretty nice aggressive sell-off on the intraday chart. So
all right, thank you, Greg, because that was that was pretty aggressive going into last week. And just guys, just a heads up, if you're looking at the dollar, it's bouncing right off of that breakout point, which is pretty important. You can see the euro is actually at its lows from following the data. So as soon as that data came out, there's that weak US data, the euros retraced all of that. So just a little heads up. You can see how the dollar is like, it's kind of leeching on to that risk off type of personality. I actually sold some euro earlier in the chat room. If you guys are in the ForexAnalytix chat room, you probably saw that. Now, Dale, I know Rohit's not here, so let's wrap up with this. What's going to be big on your radar this week?
Whether or not what happened Friday in the dollar is real.
Okay, so you looking at the dollar, that big move that you saw on Friday, are you questioning it, or do you think that the dollar's got further to go?
I think it's got further to go.
Okay, and you know, I think
it's not going to be, it won't be embraced, and it's a possibility that, you know, I agree with you know, what Jim is saying, that this is B, and if it's C, we're going to challenge the A high 105.5, and I think it's not going to be a well-embraced rally because of all the bearishness in the dollar. Remember how we talked about all the news stories about de-dollarization, and your maid asking you about the dollar, and farmers asking me to come in and say, what should we do about the dollar? So I think that this dollar rally could surprise people on the upside.
Yeah, me too. And that's why I think the 106 level is doable. You know, Steve, I go back to your comments and I think, well, you know, does the dollar have more to go here? It does, but I don't think it really is going to surpass, like me personally, I don't think it's really going to surpass the 38% retracement.
I agree with you.
So we got some upside here over the next, you know, couple of weeks, but it's still going to be contained. You know, that means the euro, you know, dips are probably.
I like your 78.6 back. I like your 78.6 back. 11.78.
And the correction higher is going to be healthy, right? And yes, there is a lot of bearish sentiment for the dollar. I think a rally higher will also fix that. A lot of people that jumped into these trades very late, thinking that it's a slam dunk one-way street, will have to be punished for it, as the market usually does. Some people will have to start doubting, because we know how there is nothing that changes minds faster than price action, right? So pretty sure we might see a few people starting to doubt or guess that, you know, dollar might not be done rallying, and that the whole move lower in the dollar might have been corrective in nature, which I don't think it was, but some people are going to start wondering about it, and that's when we'll see the dollar resuming to the downside.
Yeah, I mean, you know, like I said on the week ahead video, I think there's way too many bears out there. I mean, my cleaning lady is like, you know,
right.
She was asking about the dollar bearishness, for crying out loud.
That tells you need to know.
You keep handing her counterfeits when you pay her.
I that's right.
Have you started paying?
I've been paying her in pesos, man.
That's what I wanted to ask, if you've been paying her in pesos.
I was. You know, Tommy says, unless we have a super big catalyst. You know, the super big catalyst is, you know, you think about what the dollar, you know, that could drive us higher. You know, we get a debt ceiling raise. I mean, it'll take some of the dollar will rally, you know, as a result of that. It should pop. You know, maybe that's the catalyst. Maybe there's another catalyst out there. I don't. I mean, but what I will say is I would not want to be short the dollar at the moment, and especially if we get above last week's highs, which comes in at 102.80. We start breaking that, and then you don't want to be short the dollar for a while, because that's going to take the euro back down to 105. You know, and I still think this double triple top still has some room to go. You know, maybe get us down to 107.50, as I said on the week ahead video. So well, hey, Dale, I know we filled in a little bit of time. Rohit, I'm sure we'll be back here. He was dealing with rolling blackouts.
This was my mistake. I double booked Wednesday, so he was due to come here Wednesday, and I have Adam coming here Wednesday.
Okay.
So,
all right. Well,
anyway, you know,
hey, you're always great about bringing in guests. Who do we got this week? Who's the remainder of this week?
Okay.
Let's see.
We have a decent lineup. James Anderson is going to be here, and Adam Button's going to be here, and Peter Bookvar is going to be here, and Rohit, I'm going to get him come back Friday. So,
awesome. You know, I love Peter Bookvar is coming. He's, you know, so great to listen to. Adam Button, obviously from Forex Live, is great. So Dale, thanks for always lining up these great interviews. It sometimes, you know, it's coordinating. You know, it's like it's tough.
My wires.
Man, who doesn't?
I am becoming a little bit more forgetful. I think I'm getting old timers.
Dale, my name is Blake. You got that? All right. Hey, team. Everybody, thank you so much. Steve, appreciate your thoughts. Grega, really nice to have you here today. Don't be a stranger.
Yeah, I know.
Yeah,
Grega, clarity to the community, and nice giveaways to people that come to F.A.C.E.
Right, nice. Right. Yeah, absolutely. He's our in-house Elliott Wave analyst, you know, where you can get it right here on ForexAnalytix. So Dale, hey man, thank you for always being a great host and bringing in some great interviews.
All right. Well, enjoyed it this morning, team. Let's kill them this week. Good hunting, everybody. And don't just count your pips, count your blessings. See you for Turnaround Tuesday tomorrow. Adios. You could join the team in 21 minutes on the Morning Edge. If you haven't been in the Morning Edge, you need to sign up so you could be part of it, so you're really prepped for this week. F.A.C.E. is only the tip of the iceberg of what ForexAnalytix can offer you as a trader. Adios, everyone.
Thank you, Dale.